What is good, YouTube? It is your boy Sean, known online as Sensei Trades or Sensei underscore on Instagram. Don't forget that X. 7-year experienced day trader, six-figure prop firm trader, and ranked hedge fund asset manager on the Darwin X program. So in this video, I am going to be giving some tips on how to improve your entries and your trade management as a whole. Now, before we get into the list, I just want to give one, I'm gonna call it honorable mention. And that's basically just understand that better entries is more of a luxury than a privilege. So no matter what you do in the markets, there's going to be moments where you don't get that accurate entry, where you may have to take some drawdown for a little bit. But there's going to be times where you get that perfect entry. You know what I'm saying? So you just got to understand that getting those perfect entries is not something you should feel entitled to get, but as long as you keep that routine up that can get you those wick entries or those better entries, sniper entries, whatever you want to call them, then that's what you got to do. So just understand that the markets are going to do whatever they want to do whenever they want to do them. It don't matter how much back testing you do, it don't matter how much trading you do. There's going to be moments where the market is just going to absolutely destroy your setup. So, tip number one, understand that every strategy is just a theory. So, if you're expecting to find some secret technique on the charts that's going to boost your profitability and give you those accurate entries, it's not there. Yep, it's not there. You are not going to find what you're looking for through the technicals to a certain extent. That's for another tip. But at the end of the day, it's all just lines and boxes on the chart. None of it holds any increased probability for profitability. I say this in almost every video where I talk about trading and trade management. The only way that you're going to get into that profitability like sector is understanding how to manage your risk. But every strategy is just a theory that you, for example, you, the trader, came up with. So when you watch these guys on YouTube, if you watch me, how we trade, how we analyze the charts, that is our personalized approach to the markets and our own theories at work. So the theories and the concepts, again, hold no increased probability of profitability. All that smart money stuff, same thing, right? It's not just going to immediately make you profitable. All of that is just additional context to help your mind make sense of the trade before you enter the trade. Right? I said that before as well. The advice doesn't really change. You feel me? But if you want to increase your entries, you just got to be able to tell your own story and just figure out what works logically for you in the markets and not try to copy somebody else to the T, right? Because even if you copy them exactly to the T, you may still not be profitable and you may not catch the same entries as they are because it's a psychological thing. They see something different than you, even if they teach you the exact same thing, because it's all intuition based. You only get intuition over time. You feel me? That intuition is that gut feeling that will basically help develop your edge. And with that edge can come with better entries, with less drawdown entries, things like that. So your strategy and your or theory, whatever you want to call it, is just there to make sense visually of what you're thinking in your mind. And before anybody tries to argue with me, try to say that their strategy holds some kind of realism to it, whoever they learned it from has some realism to it, I'm gonna just say this and I'm gonna leave it alone. There is a reason that every mentor on YouTube has to tell you that it's not financial advice. On to number two, structure first, concepts later. I don't care what anybody says from here on out. No strategy is effective without understanding structure. Every single strategy will require some understanding of market structure. No matter what you trade, you have to wait on a high or a low to get broken regardless before trying to enter a trade. Why? Because that indicates where the market is trying to go. See, if you want better entries, you first have to understand how the market is built. It's not built off of algorithms bouncing back and forth hitting your stop losses. Are algorithms at play? Yes. You feel me? Y'all got me repeating the same advice. Some of it, but are there algos at play? Yes. But they are not altering or purposefully hunting your stop loss. What is that algorithm supposed to do with your $20 stop loss? Your $50 stop loss? Most of y'all are trading prop accounts, which are simulated accounts. So how can you say that your concept is manipulating the markets, but you're on a virtual account? You have nothing to be manipulated. The structure of the market will always come before the strategy. It'll come before any indicator. It'll come before it's coming before anything, right? Because the only true indicator to tell you where the market is going is the markets themselves. You add the concepts later, just like it's step one. Everything is just a theory. So you need to put the reality first, then the imagination later. Once you understand, okay, price just broke this high or this low, then you can add your context. Then you can be like, okay, I believe this is a stop hunt or a liquidity sweep, whatever. I'm going to enter sells. Or you may see it as a break and retest of a support and resistance level to buy it. But that comes after the fact. You need to understand highs and lows, not all this market manipulation stuff. Because at the end of the day, again, the market is going to do whatever it wants to do whenever it wants to do it. You can't control what happens in the markets besides your risk. Structure first, concepts later. Step number three, stop loss placement is key. I had to come to TradingView for this one. So take a look at this setup right here. I know it's Friday and I normally don't trade Fridays. So this was just a mock-up trade. You feel me? I just took it on one of my degenerate accounts. Here's the P&L for it. So yeah, so stop loss placement is key. So as you can see on this setup, this wick by itself, this wick by itself pulled basically 10 pips exactly. So if I had my stop loss anywhere beneath this previous 4-hour balance low, if we come out into the 4-hour time frame, as you can see over here, and for those that are not aware, I trade a theory called the auction market theory, and I combine that logic with my technicals known as SKC. So go watch my previous video where I break that strategy down in complete detail, but this is the combination of both. So this is why I'm kind of hesitant of getting smaller stop losses, because petty stuff like this could happen. You feel me? So this is why stop loss placement is key, because you need to give your trades room to breathe. It don't matter how good the entry is. The markets can just be petty. As you see, this took out some sellers. That took out some sellers, and I'm pretty sure it tricks some buyers too. Because depending how you looked at this, You probably saw a support and resistance level right here. You probably saw that support and resistance level right there. So if you were a breakout trader, you probably saw this candle expanding. You would have took your entry, would have pushed up a little bit more to give you false hope, just to wick back and absolutely destroy you. So again, it's really all about perspective and what you use. But regardless of what you use, your stop loss placement is important because it should basically be an indication that the entire market is going to flip on you. If you can remain aligned with the trend via basic market structure, if you were to lose a trade, that's because the entire market switched from bullish to bearish or bearish to bullish. If you're getting stopped out by petty moves like this, right? Or let's go to yesterday. I reviewed this in my previous video to this one. But say I never gave myself this space, right? And I had my profits or my stop loss choking this trade. I would have got pinned out right before it flew into profit. So even though my entries was basically perfect, because my stop loss was too tight, that would have stopped me out and ruined my good entry. You feel me? So make sure you give your trades room to breathe, and that will increase your accuracy as well. Tip number 4. This may be subjective to people, but in all honesty, it's going to make sense when I explain it. But trade 1 to 2 pairs. You do not need to trade the entire watch list. Now, I know that there are traders out there that are capable of doing so. But if you're asking me, quality over quantity every single time. You will find that you will become way more profitable than you've ever been just giving all of your focus to one pair and then have a backup pair just in case the first one ain't acting right. You do not, again, you do not have to trade the entire watch list. What you will realize is, and you can really only see this if you have a track record to look back on, or at least a good enough trading history, is that you are just statistically not as good on most pairs than others. No matter what you do, you're just not going to be profitable on those pairs. For whatever way you need to trade, that pair may not provide it for you. So you need to focus on 1 or 2 pairs that can give you the setups that you want at the frequency that you want them without having to take yourself out of your psychological zone in order to trade properly. So that's why, matter of fact, just take a look at my P&L right here. This is my P&L for the entire month of February up till this week. I want you to pay attention to close to the halfway mark to current date of this P&L. Notice when I got more blues in my dashboard. It was when I started to focus on primarily GBP USD with gold as my backup. And I only know this because in the Dolman program, and I have this in a previous video, when I looked at my data and my statistics, it said that gold was my second best pair and GBP USD was my best pair. So why would I keep trying to trade the lower probability pairs when I have literal evidence right here telling me what pairs I need to focus on? You will not miss anything on those other pairs besides losing your money. Quality over quantity. So now the final tip that I'm going to be leaving y'all with basically goes hand in hand with everything that I've talked about. Basically, this entire video, every tip goes hand in hand with each other. So to put the cherry on top of the, what they call it, what they say, the cherry on top of the milkshake or something, the cherry on top, right? Collect data. Collect data. You will not know if what you are doing is working unless you collect the data. I don't care how it looks on the charts. See, if you watch basketball, right? And I'm talking about real in real life, not watching it on TV. The players don't look like they've been scoring a lot, but when you look at their stats at the end of the game, they mess around and drop 30. But you swear they only shot maybe like 5 times that entire game. That's how it is in trading. You're going to think that you're doing good, but then you look at your statistics and you're actually doing pretty garbage. So then it's going to be time to pivot, right? So your good entries that you may think you've had, they weren't good at all. So now let me show you what I mean. So here we are on my Darwin X dashboard. As you can see at the top, I am ranked 1063rd. I topped out at about 500 something. I'll throw the screenshot up. But when I tried to trade CPI and took that loss, it knocked me back down to here. So I went from the top 10% to, I don't know, the top like 15, 20%. We can actually figure this out. Hold on. Let's see. So yeah, so I'm in the top 15%. I'm ranking higher than 86% of participants. Out of 7,964 other traders. So we hold it pretty strong, but this is what I mean by collecting data. Thankfully, Darwin X does it for me, but you can collect data either by yourself by just making a spreadsheet of what pair you traded, what time, how much, all of that. Or you can look for automatic trading software like my FX book, for example, where you can connect it straight to your account and it will journal your progression for you. But this is what I mean by collecting the data. So if we go here to assets and time frames, obviously I trade Forex primarily, so that's what I've traded. But when you look at my stats for GBP USD, I've taken 53 trades, meaning I've clicked the button on GU 53 times, and I am 56% profitable on GBP USD, meaning I am winning literally every other trade, if not every 2 out of 3 trades. So very, very, very good numbers there. And then as far as gold, as you can see, I pressed the button 15 times, 80% profitable, and they estimate for me to be able to get 3.5% return trading just gold. So this is what I mean by collecting the data. When you can see your numbers, when you can see your statistics, that can help you optimize your approach to then help you get those better entries, because you are now on the pairs that psychologically will allow you to do that. You get what I'm saying? It is all a psychology game. The charts is nothing but a visual of what you are thinking in your mind. Go for performance, not charts. The charts are always going to look cool. We can always make them look nice. Oh, 0 pip stop loss entries. I know it looks good and dandy, but you got to see what happens on the back end. If these numbers ain't reflecting what your charts look like, you're not trading good. Simply put. So that's going to do it for this video. But before y'all go, I'm going to give y'all one more tip on your way out the door. And that's just be confident with yourself. You know, some of y'all have been trading for 2-3 years. Act like it. You know what you're doing. I promise you. You know what you're doing. You just need to not focus so hard on the technicals and understand that perfect entries come with experience, not charting strategies. You can learn everybody's charting strategy and still not be profitable. Everything begins with your experience. You have to put the reps in. There's no shortcut around that. Most people clicked on this video thinking that I was just going to give some secret sauce to overnight success. Nah, big dog, you got to go to work. It's time to work. You got to hit them charts. You got to back test. You got to collect the data. And you just got to put that belief into yourself. You got to have the confidence that everything you have been doing is going to work. Or at least if you're unsure, you need to at least be confident enough to allow your strategy, your concepts to play out. So then when you go back to look at the numbers, you can see if what you're doing is working or not. Once you have the undeniable facts that what you're doing is working, that will also contribute to your confidence. As y'all seen, I can see that I am doing amazing with GBP USD and gold. That loss I took did nothing in the grand scheme of things. It didn't shake my confidence. I didn't get mad. I laughed when I lost. Because that's how it's supposed to be. You feel me? I know my stuff works. I know that when I teach people my stuff, it's going to work. I know these things with undeniable fact. Nobody can take that away from me. That the facts show where I'm good at. So that's how you need to position yourself as well. You need to position yourself to be able to track your data so you can see how well you're really doing. It always looks good on a chart. It's always going to look good on a chart. But when you actually look at the numbers, that's where the truth comes out. When you can see the truth, your whole mindset will change. All right, but I appreciate y'all for watching to the end of this video. Please give me a like and subscribe if you liked what you see and then want to check out more. Click the link in my description below to join my Discord. I don't sell anything but my time, but that's not even important. Everything that I would teach you out of YouTube, you can find right here on my channel. Just click any video and get put on game. But you can join my dojo, chop it up with me directly. You'll be able to see what trades I call out for myself. So every trade that I call out, I'm taking. I send the P&L, I send updates, I send all of that. And yeah, let's just grow the community. Let's grow the dojo out. All right, but until next time, may the bag forever runneth deep. See y'all later.